We predicted about this fair value gap on weekly time frame on DSY in our previous week that just ended, and market did exactly how we predicted. Let's dive into the charts and see what plays out. On DSY, first off, let's go to COT, Commitment of Traders report. This is a DSY, and we go to phase map of DSY. For the past 4 weeks now, market has been what? Accumulating. Look very well here. It has been accumulating for the past 4 weeks on DSY. These are the what gave us that confidence. Then we hop on to the chart. We reference on this particular fair value gap here on the week of 8th of June and the week of 22nd of June also, that the fair value gap is strongly holding price in as much as the wicks are doing the damage while the body is telling the story. You can see the way price is come down to the fair value gap and rejected that. That is to say, the wicks are doing the damage while the body is telling the story. And what do we see that this week? Price respected that fair value gap and push higher. And we are not done. If you go back to again and look our commitments of traders on DSY, you can also see that this week also the buyers come into the market more. There are net 740 in longer position. So 4 weeks now they have been accumulating, and based on the COT data, there is no evidence they are slowing down for now. So what are we expecting? We are expecting the 12th of May 2025 high to be taken, and that level is 101.977. We go to euro. You can agree with me, euro is inverse of DSY. And let's first of all look at what is euro doing on COT report. On COT report, for 7 weeks now or more than that, institutions are adding short position on euro USD. So that is to say, if institutions are selling USD, euro, what are you doing? So we have for the past 7 weeks institutions are selling USD. So why will you decide to be buying? And we go to a chart on a weekly time frame. That is exactly what is happening here. Market did exactly what we expected, and we are not done yet. We are still expecting lower prices on euro USD, since we are still bullish on DSY. So we are expecting the opening price on 19th of May 2025 to be hit, and also 27th of May 2025 we are expecting that level to also hit the low, and also we are expecting 22nd of June 2026 low to be taken out. Then we head to pounds. Let's check first of all on COT report on pounds. Now on pounds, if we check the short side and the long side, you see that are both adding both long and short position. But where we see a change that is very obvious is the open interest. They started from open interest of 323k to current level of 262k, and that is to say the participants in the market are doing what? Exiting the market. And once they are exiting the market, they are trying to, probably they have some profit, they are just taking out some profit. You expect either retracement or a range or whatever you might call it. This is for institutional side of the market. Then when we head to chart, in as much as the price level, the price chart is not that beautiful or so nice, I'm still expecting price pounds to keep on pounding lower. Now let's head to S&P 500. And before we dive into the chart of S&P 500, let's look at the COT report of S&P 500, that is ES. In ES, institutions are both adding longs and also adding what? And a closing a short position. Sorry, they are doing what? They are closing short positions and also doing what? Closing longs position. And where it will get obvious is open interest again. You can see from here we have a 2.5 million open interest position, and now we have a 1.9 million open interest. That is just to say that institution, in whatever that might be their reason, are doing what? Closing their position, exiting the market. So, and when they are doing that, you either expect a retracement or consolidation or what? Pullback, whatever name you call it. But in this case, in our chart, when we help up to the chart, we can see on a weekly time frame that the price action is really messy. We have been on this range for several weeks now, since God know when, since May. We have been on this range. We have been ranging here, so nothing is moving here. Institutions are doing what? Are not taking any position, rather they are trying to close the long and the short position. They are trying to exit the market or do whatever thing they think that pleases them. So what are we doing on a weekly time frame on S&P 500? Nothing. On a daily time frame, nothing. But if I'm being forced to predict or say where exactly am I expecting market to go, I would say, okay, let this 29th of June 2026 low be do what? Be taken out. If I'm being forced to predict. Then on NQ, which is a Nasdaq, previous week we emphasized on this 15th of July 2026 low and 19th of 17th of July high 2026. So we're expecting the fair value gap there will be used as a resistance to push price down or to push high. But market do what? Use that same level as a resistance to push price lower. So what are we expecting going forward? We can as well again use the fair value gap on 22nd of July and 24th of July. We can use that. We wait for price to come over there, then we sell from there again. Then YM, what do we have on YM? That is E-mini Dow Jones. Since we are being forced to predict market, we will be doing what? Also expecting lower prices on YM. Last but not the least, gold. Gold for now on institution side of it. Let me show you on institution side of it. There is nothing very obvious for me to say on this COT report here, and also price action, nothing interesting here. Price can either go up or come down, and take this sell side at 3885.72. So gold is out of my watch list for now. All right, let's quickly recap. Our surest or high probability setup is DSY, Euro USD, just the two, Euro USD and DSY. So we expect DSY higher, we expect Euro USD lower. Pounds, we also expect lower prices. Indices, we also expect lower prices, but not high probability. That is ES, Nasdaq, YM. Good indecision. Alright guys, that will be all now for now. If you have not subscribed, hit the subscribe button now.